Hello, everybody. Welcome to Clever Investments. Let's continue to talk about why covered call is not likely a good trading strategy. So, in the last several videos, we have discussed that backtest results show that covered call is not as good as buy and hold, and its drawdown is also very close to buy and hold. So, it has a lot of risk, but not a good return. So, one of the counter argument I often hear is that you don't have to sell covered call each month. So if I can predict in the next month the stock is not likely to rise sharply, then I can sell covered call. On the other hand, if I think the stock will rise a lot, then I don't sell covered call. So how do you predict that? I saw there are many ways. You could use technical indicators, moving average, many things. For example, if the last month stock dropped a lot, then you think the next month it may start rising a lot, which might be true, but might not, because it's very hard to predict the direction of the stock. And to do covered call, you not only need to predict the stock direction, you also need to predict the speed of the move. Basically, in the next month, it moves up by a lot. So it's even harder to predict. But if you have that ability to predict, maybe you do. Somebody in the world may have this ability. If you have that, then likely there are other better strategies you should use instead of covered call. Because not selling covered call only allow your original stock to go up. But you are wasting your prediction because you could simply buy more stocks if you believe the stock in the long term can go up by a lot. Or if you strongly believe it can go up in the midterm, you could buy LEAP, which is a call option that will expire in a year or two. So that allow you to use less money, basically give you a higher leverage so that you could potentially get higher return, but also with a higher risk. Or if you really believe the stock gonna go up so quickly that you can't sell covered call, you could reverse it. You could buy the out of money call. And if the stock really goes up by a lot, your out of money call can increase by 200%, 300%, 1,000%, or so on. So you could make your stock portfolio grow much, much bigger. And all those strategies, they are no longer the covered call. And the problem of covered call that it has limited upside potential is not helpful, even if you have the rare ability to predict stock movement direction. Okay, finally, a disclaimer for this video and all other videos in this channel. I was just sharing my personal views here, not investment advice. Investing involves risk, so please do your own research and make your own decisions. Thank you for watching and see you next time.